do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 15th day of March, the Ides of March 2018. So glad to have you with us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're so glad to have you with us. I've got a chart up of the S&P 500 Emini Futures. If you cannot see the chart and you're not driving and you're not operating heavy machinery, by all means go to our home page at cfrn.net. On the right hand side, click the big microphone, follow the instructions. In 30 seconds, you'll be registered all the way through the end of the month. You only register once per month, and that gives you one-click access to the show, to the charts, and to the chat box. Now, should that technology fail you someday, you can go to youtube.com/CFRN/live. We do provide a live stream of the program during the broadcast, and then we archive it at youtube.com/CFRN. And there you go. Let us take a quick look at the numbers around the world, and then Michael will pop in and give us a recap of what happened in the live training room today. I do want to say we have a partners meeting tonight. Partners, you know you can email your questions ahead of time, and that puts you at the head of the line. And for those of you who've been on the trial this week, you've still got plenty of time to get your paperwork done, to get your username, your password, and your invitation so that you too will be in that partners meeting tonight. Now, let's start with the cash markets here in the U.S. The Dow currently up 250 points. NASDAQ up almost 3 points. S&P 500 up 5.5, and the Russell 2000 down 3. The mover and shaker there would be the Dow, which is up just over 1%. In the commodity basket, crude oil up 33 cents, half of 1%, trading 61.29 last. Gold down $8.90, a little over half of 1%, trading 1316.70 last. The Asian markets, the Nikkei is up 26 points on the session, or closed up 26 points on the session. The Shanghai was flat, and the Hang Seng posted gains of 106 points. In the European markets, the FTSE closed up 15. The DAX closed up 98, which is almost 1%. And the CAC was up 32 at the close, which is a little over half of 1%. So it's a solid green day in Europe and Asia. Here at home, we're green with the exception of the Russell, and we're only underwater there by 3 points, and that could certainly sort itself out very quickly. Now, Toys R Us, they came along after I stopped getting trips to the toy store. Well, let me just say this. In the small town I grew up in, there was a 5 and dime and something else, and that's where you got your toys. So I don't know how long Toys R Us have been around, but they are out of here. It's the end of an era. Wow. The company filed a motion to liquidate its business early Thursday, meaning it will close or sell all of its remaining 735 U.S. stores. It had filed for Chapter 11 bankruptcy protection in September. The debate of who and what killed Toys R Us now ranges among analysts, company executives, and casual toy shoppers who are lamenting the chain's death. Toys R Us was once the king of the toy castle. In the 1990s, it was the biggest toy seller in the U.S. and was expanding rapidly as it pushed out the smaller toy chains. By 1998, things had changed, and Walmart began selling more toys in the U.S. than Toys R Us. It signaled more trouble ahead. Toys R Us then launched a turnaround plan that ended with the chain seeking buyers. Bain Capital, Kohlberg, Kravis Roberts, and Bernardo Realty Trust together invested $1.3 billion in a $6.6 billion leveraged buyout in 2005, taking Toys R Us private. This meant that the company had essentially been purchased by using its own equity with the help of the private equity cash. This, of course, saddled Toys R Us with an astronomical amount of debt, over $5 billion. That's a lot of toys. And over a decade later, the company still hasn't shaken it off. According to the filing with the bankruptcy court, Toys R Us was still making $400 million payments on its debt each year. In Toys' case, high leverage remaining from the 2005 leveraged buyout reduced financial flexibility, which in turn limited investment, leading to the erosion of the company's competitive position at a time when its primary competitors, such as Walmart, Amazon, and Target, were running on all cylinders. These high payments prevented the chain from making the necessary changes to compete, like improving the in-store experience and beefing up e-commerce in the age of Amazon. The debt also prevented the chain from keeping up the appearance of its stores and ensuring that employees were well paid. Boy, nothing worse than a grumpy clerk in a toy store, right? Retail's landscape was also shifting underneath Toys R Us's feet. It's possible that Toys R Us could have done more to postpone the end, like closing stores sooner, but the combination of increased competition and lack of maneuverability eventually led to the current situation. In the liquidation filing, Toys R Us blamed its poor holiday performance on Walmart, Target, and Amazon, pricing their toys low enough that Toys R Us could not compete and make a profit. Not everyone agrees that the debt load led directly to the demise. When you have Target and Walmart on one side and Amazon on the other, the amazing thing is that it is all alive at all. I've gotta venture a guess that the fact that kids today spend an awful lot of time on a computer, in front of a tablet, binging on Netflix, that perhaps the toys of a generation gone by, the things Toys R Us were famous for, don't get played with as much. I mean, if you can play with a dreidel or a spinning top, or you can become immersed in a three-dimensional world as a cop or robber, whichever you choose, well, you know, the dreidel's only going to hold its spell on you for so long. And then the Xbox starts to call your name. So, Toys R Us, I guess I won't really miss you because I don't know that I've ever been inside of a Toys R Us store. I'm trying to think. I don't know where there is one in Phoenix, and so chances are I've not been inside of one. But by Toys R Us, and of course, you know, I realize that there's an awful lot of human lives at stake here. People have lost jobs, and so for that, my heart is heavy, and my prayers are with them. Michael, if you're ready for the recap, we're ready for you.
I am ready. And that's too bad that Toys R Us is going away.
Yeah.
I mean,
is that a place you got toys as a kid?
Not as a kid, but it's a place I took my kids to a ton of times.
Okay.
Yeah, a ton of times.
Were they kind of expensive compared to like the discount, you know, like to Walmart or something?
No, they're about the same. And, you know, they had to be competitive.
Right. Okay.
And they had a bigger selection. I mean, they had a ton of toys in there, just tons and tons of toys. It made me want to be a little kid again every time I'd go in there. But you know.
Yeah. Go ahead.
I don't know. You know, it seemed like they tried to get all the popular toys, like, you know, the little guns that shoot those Nerf bullets, little Nerf guns or whatever they are.
Right.
You know, they had like 3 aisles devoted just to that.
Really?
And yeah, because they were popular among boys.
Yeah.
Up there anyway. And God, Jake probably had 30 of them. You know, every time a new one came out, they'd have a commercial on TV, and we'd have to go get it. But I don't know. They had a lot of really cool stuff. It seemed like.
I remember when I was a kid. I don't know how I remember this, but I do. They passed a law that said, now, when I was a kid, you got cartoons on Saturday morning. Period. Yep. I mean, now you've got channels and networks devoted to cartoons, but in my youth, you got up at 6 in the morning, you watched cartoons till noon, and that was it. It was over to the next
cereal right out of the box.
Yep. Yeah.
And you had to get up to change the channel.
Yep, you had to get up, change the channel. They kept us fit. You could not advertise a Superman action figure during the Superman cartoon. You could not advertise a Batmobile toy during the Batman cartoon. I guess they figured it was just too heady of an elixir for those little mines to, you know. I don't know what the real reason behind it was. I mean, I can see where, but it's not like a kid could get up and run out the door, you know, during. So I think it was an overreaching, overstepping law, but probably not a bad idea.
Especially back then, because we didn't have Walmart, we didn't have Toys R Us, we didn't have.
You couldn't call Amazon and get the 1 hour delivery. Yeah.
No, you could not do that. No, you had to drive. Probably out there in Phoenix, you probably had to drive 100 miles to get to a store that might have one.
Well, in
Arizona. In Arizona, not
yeah.
so much Phoenix.
Yeah. Phoenix is a major metropolitan area.
Yeah, I'm in Arizona.
Forever, but yeah, once you get outside of the city.
Once you get outside of the city.
You head north of Phoenix, once you get past Anthem and Black Canyon City, boy, there's a whole lot of nothing until you hit Verde Valley and Sedona and Flagstaff. I mean, a whole lot of nothing. So when people talk about overpopulation and where's everybody going to go, my goodness, have they looked around?
Yeah. Go to Kansas.
Go to Nevada.
Kansas or Nebraska.
Go to Nevada. I mean,
or Nevada. Yeah.
There's
Nevada.
Moonscape, and then there's Vegas, and then there's Moonscape, and then there's Reno.
Yep.
And then back to the Moonscape. All right, buddy. I'll let you do your thing.
All right.
I'll be right here.
Okay. All right. Here we go. We do not have to do a recap of the recap today because, well, we had a red day again. 2 in a row. It's unusual. Actually, it's not unusual to have 2 in a row. It's unusual to have any. But once I have one, then it's not unusual to have another one following it because there's a reason that I had the one. And it's usually that there's something going on with the markets. Like they're setting up for something. All right. Well, here we go. Good afternoon, everybody. Today is the 15th day of March 2018. All right. So if you have not taken a free trial with us, today is Thursday, the 15th day of March 2018. We have a partners meeting tonight, 9 p.m. Eastern. Yeah, what I was going to say is if you go to the homepage here at cfrn.net and you want to take the free trial, up at the top it says sign up for the CFRN Live Trading Room. 100% free trial. User indicators on our strategy. Click here. When you click there, you'll be brought to this page. On this page, it's called apply.cfrn.net. All we ask for is your email, your first name, how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, well, you don't get a free trial. All right, because we don't know you took the free trial until you hit that. All right, results. Now, it's uncommon for us to have a red day, but if we have a red day, there's usually a reason, and it's because the markets are just not giving it up. So if I have 2 in a row, that's not terribly uncommon. Yesterday we were down 125. Today we're down $12.50. That's best thing to do, Brian. Just take a break. The market's going to be there when you're done. Today we lost 2 ticks on the euro. That's what we did. It took us 6 trades to do it. So on the month now we're at $698. On the year we're at 8,063. That's over 48 days, averaging $167 a day. That is 1 contract, 2 hours a day. Okay? Okay. Let's go through what happened. Today we started out with a stop out here on gold. Now I shouldn't have taken this. The cycle was flat toward the middle. Usually I won't, but that was my first trade on the day. And I thought we were going to get another leg like this, which we did end up getting, another leg like that, but it stopped me out first. So we ended up with -8 ticks there. We got the 8 ticks back over here, and then we just got into this really choppy mode right here. And it was choppy all the way through the morning session. I was looking for an opportunity to get a couple of ticks so that I could at least have a yellow day, but it didn't happen until after the room was closed. Right here, after the room was closed. And I kept the room open for an extra 10 minutes today. And that was it. That was it. The gold. On the euro, let's see. Looks like I missed a trade right here. That would have been a nice trade where we probably would have gotten our goal for the day. I missed that, and I missed that. Then I stopped out on this one, and you see I stopped out, and then it came back to a point where I would have gotten a break even. And I missed that, and I got 6 ticks here. So I was -8 here, and after the 6 ticks here, I was at -2. Okay, toward the end of the room, there was a shorting opportunity here that I tried to get filled on that I didn't get filled on, and then we just had nothing. During the break, there was one opportunity right there, and it looks like another one right there. Okay, and that was it during the break. So we're -2 on the euro. Crude oil, we had a couple of break-even trades here. One right here. We had this huge leg down here, but there wasn't a trade set up. We missed that and that, both of which would have been break-even trades. And we missed this one, which would have gotten us our goal for the day. Okay. I tried to get filled on that, but it was too late. I didn't see it until it was like right here. And I tried to get filled on it, and then it closed up above the MA1, and it was too late. Okay, and here we had a break even. All right. I'm now looking around. Nope, just really choppy. No other trade setups. The ES looks like, let's go back here. I wouldn't have done that because the green line was all the way down into the cycle. And then the slingshot was all messed up. And then we had dynamic resistance. And then the slingshot was messed up again. So it looks like there was a short right in here that we missed. Another short over here that we missed. And then we changed directions. And right there was a nice long. And then we changed directions again. This is getting into the break. There was a short right here during the break to capture that leg right there. Okay. There was also one right here. It would have been the close below a trend line that we would draw right there and right there. Okay. And then it just got really choppy. So that was it. That was it for the morning. Come back to this. We're down 2 ticks on the euro today, $12.50. And that was over 6 trades. Okay, so on the month, $698.75 over 11 days. And on the year, $8,063.75. That's over 48 days. Okay, so last month we made $4,846. Wow. Last month was double the first month, and this month is a fraction of last month. So far. We're only halfway through, though. Big things can change next week after the FOMC comes out. If you have not taken a free trial with us, go here to the homepage at CFRN.net. It says sign up for the CFRN Live Training Room, 100% free trial. User indicators, learn our strategy. Click here. When you click there, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, you will not, I say, get a free trial, because we don't know you took the free trial until you hit that confirmation link. Okay? Okay. With that, we can now pass it back out to Studio A, overlooking South Mountain, America's largest city park, where Dwayne Reeves lives, sleeps, and works. Dwayne, are you ready? Dwayne is not ready. All right. Well, while we are waiting for Dwayne to get back from the Keurig, we'll draw a trend line like that. We have nothing here on the euro. Nothing here on crude. Nothing here on the ES. We need a pullback here. We need a pullback here. breaking dynamic support. There's Dwayne.
Yes,
Dwayne's
sir.
back.
He's back.
Okay. We can pass it back out to you.
All right. You tell them about the partners meeting.
The partners meeting is tonight at 9 p.m. Eastern. You must be a partner to get into the meeting. Okay? You must become a partner to get into that meeting. If you don't know what it takes to become a partner, send me an email at support@cfrn.net. Just put partner info in the header, and I will send you all the info you need. Okay?
Okay.
Yes, it is dropping, Brian.
Now, this morning in the live training room, guys, we talked about, just in passing, more or less, we talked about the fact that we were trading inside of a 20-point range with basically 45 down here and 65, 66 up here. And we had, for a period of time, set up a range inside of a range, which was like here. So the bigger range was 20 points. The smaller range was, and that extended over over to here. So we had a 10-point range inside of a 20-point range inside of a 40-point weekly zone. 10, 20, 40. Now, those who've been around a while know that that is a huge weekly trading zone. There have actually been weeks where from the lowest weekly zone to the highest weekly zone was only 50 points. Many times only 60 points, between 50 and 60. So, kind of just to compare the two and to understand that we're going through something really unusual, something I don't really know the markets have ever seen before. Now you see we ran right up to the top of that range, right there, see? And what do we do? Boom. Whoever tries to tell you that support and resistance is old-fashioned, doesn't work anymore, you know, show them this. Show them this. You can trade this. From here to here is 20 S&P points. That's historically going from today back to the beginning of the markets. That's the average daily range of the S&P. 20 points. Could you trade inside of a 20-point range? Sure. People have done it for many, many years. Everyone who always wanted to become a trader and trade the S&P, that's what they were hoping to learn. How to trade inside of a 20-point range. Low a day, high a day. Day after day after day after day. And then on Fed days, you would get some really crazy action. 40-point swings, stuff like we see now. It's been every day's a Fed day for some time, but pretty quiet out there today. From a zone standpoint, we broke into the zone here, couldn't get it going, and so we started to oscillate. And this happens sometimes. The zone will become like a center of gravity. We cycle below and above and below. This one didn't last very long, and you'll notice where we rallied up to there and there. If we do this, I really would hope that you would start to see the chart more, or places on a point, more as an area, okay? Because Where this came down, it kept finding support, support, support. Buyers were willing to pay this price. But they weren't willing to pay a tick more than that right there. 27.8350. Pushes us back down, and as soon as we resurface right into this area, boom. And then we leg, retrace, finally work our way back up. Boom. Market has a memory. Okay? If they made money buying it at this price, they're going to try it again. If they made money, whoever they are, if they made money selling it at this price, they're going to try it again. Given the opportunity. Given the opportunity. And so, if we make it to the bottom of this range, if we get down to 27.45, standard zone logic says that if we come down and take out 45, we're definitely headed to 32. 132 being an area. But you've got another dynamic that's come into play because because it's such a big zone, and because we've been playing this little back and forth game for so long, that although I think this is what will win out, ultimately we will go to the zone. But when we hit this area, I think buyers are going to come in and they're going to try to drive it up at least one more time. And where would that be? Probably right around in here, 51, 53, right in that area. Okay, looks like John's ready. Recap of the recap, Michael.
We were down 2 ticks on the euro today. 6 trades.
Okay, yeah, John just jingled my phone, so let me get it.
Okay, I can open up his mic.
Oh, that's cool. Thanks. Yeah, I appreciate it.
Okay, it's open.
All right. Hey, John.
There he is.
Hi there.
Welcome to the show.
Thanks. Thanks for the invite.
You bet.
I tell you what, this is. We had a great rally this morning, but I believe it or not, I actually said that if this rally turns down, which was, kind of a bold call, when I said that, it's not going to be good. And one of the reasons why I said that is because if you look at your screen, we're going sideways on the S&P. We're not going up anymore, and that's the whole problem. And that area above now looks pretty strong resistance.
Yes, that's exactly what we were talking about. We've been trading in a 10-point range this morning, inside of a 20-point range, inside of a 40-point zone. That's like living in a land of the Jolly Green Giant. I mean,
yeah. Yesterday we were talking about this. That I sort of said there's something bad out there. We just can't put our finger on it right now.
No, I remember that.
Which
remember
was
you saying that.
causing the sell-off. And then right just before the close, there was a report came out. Trump was considering firing Sessions. And if he does in the next few days, that could really wreak some havoc on the markets. And I wouldn't rule it out. But that's just one of the things that's out there. There's this Russian thing, and then there's other things that could go wrong.
Which Russian thing?
The poisoning, over in England.
Oh, right, yeah.
It's a pretty bad deal. I mean, I think there's 12 or 14 Russians that have been, basically have disappeared, or been killed. Kind of like the Clintons. Because they're a compressed version of the Clintons. All these people, 114 people disappeared under suspicious circumstances, and this is another kind of, Boris Berezovsky. I used to have a friend who actually, was with him in the last few years of his life as a financial advisor, and. Yeah, a great guy. As a matter of fact, he slipped on broke his leg, and Berezovsky sent a plane him to pick him up and take him to a doctor somewhere in the middle of Russia or Ukraine or somewhere. And but he got well, they say he killed himself. And look, he was having some tough times. You know, he lost a court case against that other Russian oligarch. You know, several billion or $2 billion, a lot of money. So I guess he was pretty depressed. But it looks like he was knocked off. And the fellow who was alleging that it was for sure he was knocked off, he just ended up dead just a few days ago. So it's really a very seedy sort of thing. And I watched this interview with Putin, that Megyn Kelly did. You know, she had some real useless people on as sort of NBC consultants. Richard Haas. I mean, these are just has-beens who've never done anything, you know, good for the government. And another fellow who was an NBC contributor and a complete waste of time.
You're talking about, Megyn Kelly?
Yeah.
There's a waste of time.
Well, you know, and look, it was quite a good interview.
She used to be a very nice lady. I really liked her before she got so full of herself.
Putin was very hostile in the interview and pretty, you know, dismissive of just about everything. You know, he was definitely taking a pretty tough stand on things, but you know, it kind of brought up the Syrian thing and all the gassing and everything like that. And, you know, it just made me think of what I said on the show a while back. And Trump would have been, I think if he'd done this, he'd be held in very high regard right now. But there's only one, you know, you got a guy like Hitler over there in Syria. He's a complete, you know, the evil that this guy's perpetrated on the Syrian people in the last 7 years is just unthinkable. It's worse than some of the things that went on in World War II. And, you know, the torture, he's allegedly supposed to have tortured to death about 12,000 people. It's all in the papers if you want to Google it. You know, apart from massive killings and killing countless women and children and people in hospitals and everything. And, you know, there's only one answer to a guy like him, and he should have been taken out. You know, this business of pinpricking the airfields, while it was a gesture, you know, he should have taken the opportunity to bomb that palace that day and take this guy out, you know. And I think the world would be quite a different place today if he'd done that. You know, because they would have wrenched this whole Syrian thing and got rid of this, you know, the major evil behind it. So it's unfortunate, but you never know. His days may be numbered anyway. But you know, people like him, I mean, it's terrible what he's doing, and he's still doing, you know, he's using things like chlorine gas and other horrific things. And, you know, I mean, Obama is so screwed up over Syria. You know, if they'd put a no-fly zone, this is the same screw up that George Bush the First did in Iraq when he gave Saddam Hussein, you know, the ability to launch his helicopters. They massacred the Kurds in the north and the Shiites in the south. It was just terrible. And, you know, these things could have been prevented easily just by making the right decision. Just the same as I've always believed, you know, if we'd gone in and fixed Iraq the first time around and taken out this leader, probably would have saved 4,000 lives and 30,000 injuries in the second Gulf War. And I really believe there'd probably be 2 towers still standing in New York, because I think that going in and sorting out Iraq all that time back then might have led to a different outcome, or, you know, over the whole Middle East. So, you know, and it could have changed the course of history, but we can't go back now. But it's just tragic, because it was a monumental blunder. It was the biggest military blunder of the 20th century, not going in and taking out Saddam the first time around. It really was, because, I mean, you know, Iraq is barely, you know, it's only just starting to get, you know, to be peaceful these days. You know, they're back to normality, and, you know, it's nearly 17, 18 years later. You know, it's just terrible. So, or 15 years. So, just and the countless, and as Trump says, you know, the countless trillions that have been wasted over in the Middle East. And everything else, you know, the whole 9/11 experience and the cost of it on the economy, has been monumental from a security standpoint. It's one of the reasons why we've got a deficit of 20 trillion. Hopefully the world's becoming a better place now, thanks to Trump, and hopefully he'll pull off a great deal with North Korea, and maybe sort out the Middle East at the same time. But the market is really looking very heavy here. We just tried a bit of a rally, and I think we just got to, the market can't rally. The breadth is getting worse, and unfortunately, this is, here we are, Thursday, what I've been dreading all week, which is a downturn on Thursday, and it's right here with us. So I think you've just got to, you got to really get out of all exposure, long positions, and hang on a second.
Go ahead. Okay.
So yeah. Just a second.
Now up here, this is the Dow, guys, and the Dow, when we looked earlier, let's see, we are up on the Dow 200 points. Okay, yeah, 201. And these are this week's weekly zones on the Dow. Let me make sure, 3540, yep. 3540, yep, that's right, okay.
Yep. Dwayne, this could be, it's only, well, remember what I was saying yesterday about the Dow sort of outperforming the other indices? See, what's happened is overnight we've actually outperformed the Nasdaq and the S&P, or the Nasdaq and definitely the mid cap overnight. And the Dow did have a pretty good rally. It's basically turned up about 400 points from the low, which is pretty good tradable rally. People would have died for that years ago.
Yeah, right, exactly.
Yeah. But now we are in grave danger right now of going negative on the day. The mid cap is breaking down. It looks horrible. It's making new lows over the last few days. It's an extremely bad sign. And the Nasdaq is also underperforming compared to the Dow and the S&P, which is also a negative sign. And the leaders are they just can't cut it. The rallies, most of the rallies this morning have been hobbled. And unless we turn right here and have some sort of a miracle rebound, it really doesn't look very good. And I think the danger of this is another. I'm just telling you, what we're looking at is a rerun of the '87 scenario. I.e., we had this down Tuesday, we had another down Wednesday, and then a blip up overnight. It's really, the reversals of the last couple of days are so strong that they're very, very hard to overcome. I wouldn't rule it out, but it's a real tough call for the market. And if we end up down, mostly down today or down a third day, and definitely down tomorrow, if we lose some more tomorrow, then it sets us up for a kind of an '87 scenario, where we could have a possible down opening Monday, or we could have a late sell-off on Monday, then it goes into next week, and that's where we could have our 2,000 point down day, possibly on Monday or something like that. So this is, and we were talking about the breadth yesterday. The breadth. I mean, look, here's the sort of puzzle. The Nasdaq's actually rallying a little bit right now while I'm speaking, which is okay. It could be, it's trying hard to reverse upwards, but the breadth is, at the worst point of the day, practically, it's just rallied up a bit. So, during what I'm saying, really trying to say is, this rally is sort of like a fake rally, because you've got some things that are pushing up the Dow today against a backdrop of the body of the market is actually going down. In other words, there's more stocks going down today than up, and yet the indices are up a couple hundred points. That's a real red flag, and we haven't seen that kind of action for a long time. Now, who's going to win? Right now, we've got a rally going, so maybe something just help the market go higher. We don't know about just yet, but because look, I was relieved to see the rally today, and I'm relieved that we're positive, but I don't really like the mid cap being this weak. It's usually a bad sign. It's not always, and occasionally the mid cap can come from behind.
There's a question for you, John. Sorry to break in, but RJ was wondering, when you mentioned the S&P when you mentioned the mid cap, are you talking about the S&P mid cap 400, which has a symbol from the futures of EMD?
EMD, that's the one here.
Yeah, I'll bring a chart of that up. Okay.
Yeah. I wanted to just say a couple of things what I said about Kudlow yesterday, and again, the market, maybe they gave them a little bit of a boost today with this rally, but in general, the market's not on fire over the Kudlow appointment. Now, what I said about Scaramucci yesterday, the reason I would, like Scaramucci is because he is, he certainly, I think he could communicate the market picture and the economy better than just about anybody. That's why I would have favored him. But on the other hand, Kudlow is not he's a pretty experienced guy. He's been on TV for 30 years. He's definitely knows how to put a point across. And he's probably better than most of them. I looked at this Gene Sperling on this morning. I mean, what just I couldn't have a good word to say for Trump. I mean, what a disgrace. It sounds like some of the cat dragged in this guy. He's the worst, one of the worst economic counselors ever. And the rest of them are much better. Most of them, Holt Seatkin, I mean, give me a break. These guys know nothing. They really don't. It's just unbelievable how these guys get. I think Trump's, Cohn was probably the best they've ever had, and Kudlow and Scaramucci would have been certainly up there with Cohn, maybe even better. Because Scaramucci is he's a great communicator, and he knows how to get the point across, and he might be able to explain the economy to Americans better than anybody, because you've got to, especially when you're winning on scoring so many points as Trump is right now, it's a matter of going out there and getting especially in this negative media, try to get the really good news of what's really going on with the economy across the American people. That's why you need first class guy in this post.
When Karen just mentioned that yesterday, Kudlow said, "Sell gold, buy the dollar."
Yeah, that's well. Look, the dollar's probably gone up in sympathy today. Look, gold is not acting so well at the moment. But this is sort of typical pre-Fed, backing and filling. You could. I'm not saying this for sure because we don't know yet. But if the Fed doesn't raise rates, and they may not, that could be. You could suddenly see gold up $30. You might see it down $30. It's hard to say which way the market's going to react. That's the trouble with gold right now. But if they raise rates, the likelihood of gold jumping not just for $30 or $40, probably $150 is very real, and it's probably gonna happen sooner or later, but not necessarily today. But it's at some point, I'm pretty sure gold and silver are going a lot higher. And the important thing to understand is that gold is way off the lows of a couple of years ago, it's up. It's almost $300 above the lows, and it's running ahead of schedule, if you like, in terms of it's been going up while the economy is getting better. Normally gold goes up when the economy starts worsening. So if the economy starts worsening, and I would say we've still got a good year of upside in the economy ahead of us, and possibly even the best still to come. And maybe even 2 years, because a couple of little things, I don't want to really give away too many secrets, but there's one particular indicator that's been making new highs just in the last few days. And this thing is usually 3 years before any trouble. It topped out in 1997. That was 3 years before the top. And it topped out in about 2004, 3 years before the last top in 2007. So this is a very, very reliable indicator. It's actually a technology company, but it's been incredibly strong recently, and it's incredibly bullish for the economy. So we're in 18. We only need two years of got strong economy to get through 2020, and we're pretty much on a home run there. So I'd say. And look, the advanced decline line tends to top out about between a year and 2 years ahead of the market. So, and unfortunately, that has happened in the last month or so. But if we have a pullback and then we go back up, and the advanced decline line makes new highs again, it just moves everything forward. And I definitely wouldn't rule that out later this year, beyond the correction that we're having right now. So, this market could get another wind, and if we do get a sell-off here in the next few weeks, sort of similar to what happened in 2000, March, April type sell-off, we could have a pretty good summer rally. We could rally potentially up to new highs, and at least 27,750, and possibly even up towards 30,000. I wouldn't rule it out by any means. So that's kind of my feelings. Actually, we are getting a bit of a sell signal on the dusts. We went long the dusts yesterday. They're up sharply today, and the nuggets. The gold stocks are down except for Royal Gold, which is very strong today. So there could be a late turnaround in these gold issues, and I would definitely buy. I would if they went positive, I'd want to go long the golds again. I thought the gold actor was ready to go yesterday, but just as we always do, we had the discipline to put the stops in. Thank God we did, because we're down $8 or so today. So it wasn't so easy to see that coming last night, in all honesty. But if this guy said sell gold, it could have caused that to happen. So. The oil sector, the energy sector, is actually acting quite well. I would be a buyer if we start taking out the highs around 61.5, and especially on the gasoline and the heating oil are acting better. The gasoline in particular, and I think there's going to be a gasoline crunch here going into Easter and Memorial Day, which could move the oil stocks a lot higher. So the only thing that could knock them down right now is if the market turns down. I'm pretty sure it's going to drag the oil down as well. So that's why I'm saying I wouldn't be buying here. I'd wait. If there's something extraordinary happens and we start going to new highs pretty strongly, then I think you'd want to take a shot at it.
Yeah, we've got no...
And actually, the oil stocks are acting terrible today, so that's another reason to be very careful.
We've got no major market-moving news tomorrow. We got one high-impact news event, and I think that's building permits. So if there's anything that's going to move the market... Karen also mentioned tomorrow's quadruple witching day, and she thought that might have something to do with the sideways nature of the market today.
Yeah, you could get, don't think there's going to be. Look, right now the situation, especially the S&P and the Nasdaq, the Dow looks better, obviously, but because of the big rally that I had from yesterday. But the S&P and the Nasdaq have a kind of ominous looking sell signal, and the mid cap for that matter too. Look, they're really struggling to rally here. They just can't get the, you know, and with the breadth, if we start going any worse in the breadth, it's just, I don't think the market's going to hold up. And the risk is, you know, the more we go into the afternoon, and the less rally, you know, eventuates, or more of a sell-off, it could just feed on itself, and it could just turn into a late, you know, a waterfall type decline. Now, the one thing that's kind of the ray of hope, if you like, as I've been saying, is the VIX. You know, the VIX just doesn't seem to have the conviction of, you know, that there's upside ahead. Sorry, that there's downside. There's a lot of downside ahead. Yeah. So you have to, you know, hold out for this, for the possibility of a rebound here, because, believe it or not, we've gone from 42 yesterday back down to 40, and you know, we sold it up around 42 last night, right before it sold off into the close, and that was a bit of a clue that we were going to probably have a rally overnight. And which incidentally we did a little trick yesterday to catch that first sell-off, you know, that one that happened in the evening, and we actually got long most of the indices just a point or two off the lows, which really was very fortunate, because we did have a great rally and it kind of held the gains for most of the night. So, and then we had this little sell-off this morning. That was a little bit harder to, you know, I got chopped around a bit in the early morning. It's a bit, unfortunately, I was working on something else. I couldn't concentrate on it, but you know, we more or less got we got the beginning of the rally, and that's the main thing. You know, sometimes, you know, you have to take a few small hits to get right on the trend, you know, to get the trend right, just the same as happens to you occasionally. Mm-hmm. So now, the way the VIX is, in all honesty, and some of the stocks are getting a little bit better here now. So we, you know, the breadth isn't that bad. So if we are able to go back up, and stocks start, you know, more stocks start going up, you know, you could see a rally, and it could change everything. I mean, it could negate. It's really important to rally. If we can rally up enough, you know, like 50 points on the Nasdaq and maybe a couple, you know, 300 on the Dow or 400, it's probably going to nip this thing in the bud and maybe postpone, you know, this 87 type sell-off, not just a week, but possibly even a couple of weeks, you know, because it would bring that second peak of March 24th into play. So that week could be a week where we turn down ahead of April, if we're going to turn down. But you know, if we were able to overcome this 2-day sell-off, it would be very bullish. You know, it would definitely open up the possibility of another leg to the upside. So, you know, we're in a kind of a tricky situation here. But one of the reasons I'm saying this is because, in spite of the appearance of that, you know, particularly with the mid cap being, you know, so bad today, is that the VIXs look like they could break down further. You know, if we go back down to 38, 37, we're almost for sure going to go down to 35, to that ultimate buy point that I think would be great for the next entry point on the VIX. And from that point, then we could begin an upturn that could be for the ages. But, you know, you know, it's tricky. Even where the VIX is right now, if it starts getting back up above 40, 50, going up above 41, it probably means we're, you know, we could go to 43 or 44 before the day's out. So the VIX needs to be watched really carefully today as to how the rest of the market might unfold. And you know, most of these high flyers like Maxim, you know, it doesn't look very good. You know, they still look. The last few days, the damage is done. Look at Google. Google is it's only up $1. You know, it does, and in fact, it's developing kind of a dangerous looking setup here.
What symbol do you track? Do you track the ABC symbol on that?
What I just do? I just track the Goog.
Okay.
The Goog. That's the one I.
Well, they rolled it all under the umbrella of Alphabet. I don't know why. I don't know. I just wasn't sure which, because I've never traded that individual stock. But I saw a headline today, because I'm going to start putting out a list of day trading stocks for those that still like to trade equities. And I was just looking to see which ones were popular with day traders today, and I only got as far in what I was reading as Bank of America. So I'm going to bring that up for a second. Tell me, it is the symbol BA on Bank of America?
BAC.
It's what?
BAC.
Okay, Bank of America. What kind of volume? I think the reason there's an astronomical amount of daily volume. Wow, 3220. Now this is interesting. For a while I had a temporary interim branch manager downtown Phoenix, where the office was, and this young guy, I had actually bumped into him in a grocery store out. Apparently, he lived in the same area of town I do, up by South Mountain, and I was sitting there doing I don't know, I had to sit with him for a bit and do some kind of transaction, and that was when Bank of America had fallen to $5 a share. How long ago was that? Let me switch this out to daily. I think it was back during when the real estate thing hit.
2009, it got down to $2.
Okay, so the day he and I were sitting there talking, it was about $5.
Yeah, it was in 2012. It pulled back to $5, right?
And I said, well, so what are you thinking? I said, do you own Bank of America? He goes, I do. He goes, and I'm thinking about taking every dime I have saved and every penny I can get my hands on, and I'm just going to put it all on black or red or whatever you want to call it. In other words, he was just going to go toes to the wall on Bank of America. And I haven't seen him since, perhaps because I don't get out to that little island very often. But he did good. If he actually followed through with what he said and bought it at 5 and held it, I mean, goodness, we're trading 32.11 today.
Yeah, no, it's doing well. The BAC, well, the JPM has done actually, Bank of America has probably done very well percentage-wise compared to JPM. You know, if you look at this banking sector, as a matter of fact, if you look at FAS, you know, it's developing a very ominous-looking structure. I'm telling you, the structure that's developing on most of these indices is really, really dangerous.
Now, are you talking about the bull 3 times?
FAS?
Yeah, Direction Financial. Is that the one?
That's the one, yeah. Okay. And it's barely positive at the moment, but look at the overhang. Look at where it's fallen from in the last few days. And you know, just on a measured move, this thing could drop to sort of $50. It went from 82 to 57. So what's that? That's a what, $25 drop. So we drop another 25. We're really down to 50. So you know, I'm telling you, there's a shock coming for these markets that's going to rock people, and it's not that far away. It feels like it's, you know, immediately ahead. In all honesty, this structure is a carbon copy of the first quarter of 2000. You know, to give you an idea, Commerce One, which was $100 a share, they split it. It went to $1,000 a share. Sorry, it was $1,000 a share, and it went to 100. And a friend of mine sold 90% of it at 1,000, or close to 1,000. He got very lucky, got out at the top. After he turned 40,000 into 20 million, and he hung on to the last 10% for sentimental reasons. Just because, when you've been in a big winner like that, it's hard to give up. So he told me about it, and it just split, and it was at $90. And he asked me what he should do, and I said, sell everything immediately. Don't even think about it. I said, forget about sentiment and being married to the stock. Get out. It's absolutely technically bankrupt, this stock. Sell it immediately. You know what? He went out and sold the rest of his position. By the end of the day, it was down to about $34. So, that was an incredible situation. Of course, the company went under, went bankrupt. But that was $1,000 stock that went out of business. So this is a very similar kind of scenario that we have here. Where we are today is what Ed has been talking about for a long time, which is one of these days something's coming that will be a lot like 87, and you'll wish to heck, it'll happen so fast and I think this one's going to be worse than the last the early February downturn when it comes. So.
Yeah,
and all I'm saying is I'm seeing very very ominous kind of parallels to some of these tops in the past, and we're seeing, look, we haven't seen in this entire 8-9 year bull run, we almost have never seen the Dow go up 150, 200 and go down until this year. I mean, it's never happened. It's never happened until this year. And look at the result. As soon as that started happening, when you start seeing very big swing reversals like that, this is the top of this was the first top in July of 2007, July the 19th, and October the 10th, 11th of 2007, the same things happened right before the market tanked, and we're very, very close. We're dangerously close to something like that happening again here. And this time, you look any stock you pull up, Facebook, check it out today. It's negative. Google, Amazon, that little Head and Shoulders, right? It's desperately trying to hold on, but if it gives away, this thing could give away in a few hours, and the whole thing could look very, very different. All of these high flyers are in grave danger right now, in my view. So, and you look at this is the first time you've ever heard me talk really negatively about stocks. Except for ahead of the last crash that we just had in February.
Can you see my screen?
Yeah.
I clicked on one of these little icons over here. I think it said hot list or something. So anyway, KMI. Are you familiar with that stock?
I think so.
Down 4.5% on the day. MU's down 1.5%. AMD's down 0.5%. GE's up 1%.
Yeah, the dogs tend to rally on bad days. That's another way that they sort of throw you off.
Look at this, up by 82%. KBSF.
Another sign of a top is when you have a lot of high flyers suddenly come out of nowhere.
Oh, this one's 152%. DXR.
Yeah, you got to.
I have no idea. I have, like I say, it's just on this list. I don't know what it is, what it does.
Yeah.
Kind of history, but there's the chart. You see it?
Yeah.
Oh,
yeah.
Damn, doggone thing's flashing again. Gotta fix that.
Yeah, the earlier on this morning there wasn't anything standing out. I did notice that DAX were actually before it took off, but when you see these very big updates, it's usually a sign. Oh wow! Further to our dust cell, I'd go for the nuggets right now. I'd take a shot at them. As a matter of fact, I think we put a we put a buy in. This is, remember a few weeks ago we had a day like this where they opened sharply lower and they turned. This looks like the same thing today.
Now NGT is not working. What is it? NUG.
Sorry, NUGT. Sorry.
NUGT. Okay, there we go. All right, this is a 5 minute. No, this is an hourly chart right here. Yeah, this area, the support area right here is trying to hold. It's trying. Let's drop it down to a 5 minute. Yep, it just needs to. Well, we're at 23.04. If we can get to 23.25, I don't see any reason we can't get to 23.5, which would close that gap. The key is getting over 23.25.
Yeah, the markets are tanking now. This is already happening. Look at that.
On the S&P, our next. Okay, so there goes the NQ. On the sell side on the NQ last night, that was. Got it right here. On the NQ, the sell side was 70.28. So we haven't hit it yet, but we're on the way. 70.28. Alright, so keep an eye on that, guys, as it comes down. Going back to the S&P for a moment. We are still... Okay, we're back down to the bottom of that 10-point range. Which is inside of a 20-point range. Which is inside of a 40-point weekly trading zone. So, that's the deal. And it's easing down, but now we talked about this a little bit earlier, guys. When it gets down to the bottom, when it gets down to this area here, based on standard weekly trading zone logic and the Concierge Trade Alerts, is we would expect that it's going to head straight to the zone at 31.32, and I think ultimately it will. However, when we get down into this area, buyers just had a nice little pop. Over a few hours, they were able to go from this low at 27.51.5, so call it 27.52, all the way up to 27.67. So 52 to 67. What is that? 15 S&P points. That sound right? 52 to 67. Yep, that's right. 15 points. So they're gonna try again. Now, will they succeed? I don't know. Will they be able to rally it all the way back up? I don't know. But I do know that when they step in and start buying, there's a very high probability that they will move price north at least 2 points, which is enough to give you your goal for the day, if you're trading the 2420 blueprint. Okay. Any questions on that? Jones says at this point the Dow has pretty much wiped out any 2018 gains, correct? Is the Dow underwater now for the year? John?
Probably. This breakdown is very ominous, and look, the Nasdaq goes negative, it'd be very, very bad, and S&P as well, frankly. So the Dow is the last man standing. That's why it's still up. So it's a classic trap. So it's gonna look. We're not falling apart just yet, but this last sell-off was a bit of a shocker. It just came out of nowhere, and that's a sign that trouble is looming, and all of the fangs now are I mean, Google, look at Google. Google's really breaking down. And, you know, these are the leaders.
Right. Okay. All right, John. Anything else you want to cover?
No, that's it. Thanks very much.
Thank you, sir. All right.
Have a
We'll
great
talk to you a little later.
Bye.
All right. Bye-bye.
Okay.
Okay, so on the Dow, Concierge Trade Alert for last night, if you did not get a chance to do a screen grab, 5, 4, 3, 2, 1. There we go. All right. A little pop to the upside, good for $200 per contract available. Keep in mind, we never get out at the swing high or swing low. Why? Because the trail is stop. Therefore, you'll always leave a little something on the table. Okay? But always ask yourself the question, if I couldn't get it all because the trail is stop, could I get half? Could I get half? So what's half? I don't know. Call it 100 points. If you only got, okay, you had the trigger. You know where your stop has to be. You have an interim target at 935. So you're looking to go from 840 to 935. That's your target, okay? It's an area you might not get all the way there. See, this punched down, what, 30 points? Went from 840 to, actually went to 900. From 24,840. So that's 60, I'm sorry. 60 S&P points. But maybe you only got half. So that's 30. Times $5 a point, $150 per contract. Daily goal, as we teach it, $100 per contract per day. Doesn't seem like a lot in the beginning, but you get about halfway through the 2420 blueprint, and it starts to look pretty doggone respectable. Now, I drew this pattern that I've drawn a million times on the show. Okay? Price breaks through a zone as if it's not even there. It then pulls back to the weekly trading zone that it broke through to confirm that it's really going to be good support. Possibly do a little consolidating at the zone that it didn't do here, and then bang, it will resume in the direction of the slice. For those who haven't heard me say it 1,000 times, 3 things happen when price reaches a weekly trading zone, whether it's coming from below or coming from above. The most common thing is consolidation. As the market decides, once it's hit a zone, it will just kind of put it in neutral for a little bit and make up its mind. Is it going to the zone overhead, or is it going to the zone below? It's going to one of them. It's going to attempt to get to one of them. It may come a little shy. May come a little shy. Is it going to be the one overhead or the one below? I don't know. So that's why I'm going to let the market show me before I take action. Now, we just talked about the market looking heavy and could be, staring down the barrel of a pretty good sell-off. John, what did he call it? The last man standing. Let me just refresh that data real quick. Anytime you want to refresh, just go to a different time frame and then come back to where you want to be. Yeah, okay. So it's confirming good support now. And so based upon that particular theory, Dow's getting ready to turn up. Now, just because that's what happens a large percentage of the time, does that mean it has to happen? No. Will it happen? I don't know. However, once I have evidence that it is trying, okay, let's say we get the next 30-minute candle, it prints green, okay, and we close the 30 minutes period with hardly any wick on top. In other words, we close literally on the high of the next 30-minute candle. So we got all this red and then green. What would I do? I would trade it long. We'll draw an arbitrary candle. I guess we won't because I don't have that loaded here. Okay, whatever. The candle we can't draw, I'll draw it with this, I guess. We get a green candle, and it closes right there, wherever right there is. Right there is 24,986. Okay, so I put my order in to buy 24,990 on a stop, because I want to get stopped into the trade in the direction that the market is falling. So 24,990. Okay, you get the idea. Okay, now where's my trade? Okay, great question. I just need to take a moment and configure and image and drawing tools and rectangle, ellipse, apply, close. Okay. Now I can do this. What a sweet, sweet little trade. Let's see, we said we get long at 24,990. Okay, so 990. We'll go to 25,050. So that's going to be 60 points. A 60-point window of opportunity. If you don't really understand what that means or why, then you should book a one-on-one mentoring session. If you are already a partner, you have unlimited access to as much one-on-one mentoring as you need. And if you're on the trial, you have access to one-on-one mentoring session. Okay? So I'm referring just to this little box here. Maybe I should try to clarify that, so tomorrow I'll remember. There's the window. Okay. If this goes from our entry to our exit, 60 points at $5 a point, it's $300 per contract available. In other words, it could be a $300 trade or a $3,000 trade or a $30,000 trade. It simply depends upon the number of contracts that you are qualified to trade. Okay? The number of contracts that you've earned the right to trade. Same work, same distance, same everything. The only thing changing is the number of contracts. Now let's look at the DOM for just a moment. while the S&P and crude and gold, and to a degree the euro, can be traded around the clock. The Dow gets pretty quiet. Now, there's 200 contracts on the bid side, 10 levels deep, and there's 228 contracts on the offer side. Now, this is sometimes where people can get confused. If you put in an order to buy, let's say you were going to buy, what are you going to buy? Whatever you're going to buy. 24,980. You want to buy 50 contracts on a stop. Okay? As price passes through 24,980, you'll pick up those however many that were on the offer there. You'll pick those up, right? But the others will be filled at a higher price. See, like 13, 16, 24, 25. So you'll get this many at that price, and this many at that price, and this many at that price until your order for 50 or 100 is filled and satisfied. So sometimes people, I don't understand why, I put in an order to buy so many at this price, and I got filled at a bunch of different prices. Why? Well, because there wasn't enough for sale at the price you wanted to pay. Now, on a limit order, it's a different issue. You're saying, I'll only pay this much. Everybody with me? Okay. Hold on for me 1 second. And so at this time of day, could you put in an order to buy 50 Dow contracts or 100 and expect to get filled? Yes. Could you sell 100 and get filled? Yes. Will it all be at the same price? No. On the other hand, let's take a look at the S&P for a second. Could you put in an order for 100 and perhaps get filled all of them at one price? Yes. Sell? Yes. Looks like you could buy 200 and get filled all of them at the same price. But it's constantly rapidly changing. So when what looks like you got slippage on some of the contracts, could be, and it could just be that there wasn't enough for sale at that price. All right, won't beat it to death. It's important that you understand that. Okay. Now, what happened as price approached this bottom of the box here? Well, this tail on the last 30-minute candle tells us that somebody stepped in and did some buying. But it didn't get to the bottom of the box yet. No. If you wait for it to get to the bottom of the box, it might not get to the bottom of the box. Because you have a group, a contingent, a pack, a passel, a gaggle of buyers who are looking for a sweet spot to buy And while they realize that this is it, FOMO, which is very powerful, fear of missing out, will cause them to buy their ticket early, knowing that they may get a drawdown here. But if it draws any further, they're out. Hard stop. Out. Okay? We'll see what happens here. Now, bigger picture, I think what we'll see is price eventually take out the bottom of this range, this 10-point range. Then it's got to go through the same thing with the 20-point range. Does it have to? Nope, but it probably will. Okay, so as price gets to the bottom of the box, buyers see that as a value, obviously, so they step in and they do it again. If they're able to push it up past this, now you're back into the 10 range, which means now this becomes support again. You got to fight the battle all over again. That's what all this sideways motion is about. Okay, we need to either break the bottom of the 20-point range, or we need to run the other way. We need to get up here. You know, something, it's going to take some movement to set us free. Now, from here, 2750. Remember, we can just say we just broke that range. All right, we're at 2750. High probability trade setup says we're going from 2750 down to 27, call it 46. So that's a 4-point trade. You can do that? Yeah, you can do that. Now, let's say you took that trade and you got 4 points. Do you just get out? No, I wouldn't. I'd be, if you're trading multiple contracts, be shedding them on the way down. You might want to be down to your smallest position at that point. But you always want to let the market take you out. It'll only cost you 2 ticks. If you put your stop loss, once you've accomplished what you felt to be the reasonable goal, if you put your stop loss 2 ticks behind price, most times it'll come back and take you out. I understand. But there will be those times when you're at a critical area like that, where the door actually swings the other way in the direction of your trade, and it would just drop like a stone to 31.32, maybe even further. So protect your backside, but leave the front door open. Okay? Alright. So that was the S&P. We already talked about the Dow. Russell. 2 points on the downside. Another important prices, important areas, almost always tested. So 5 points. Now, it was just this red candle that gave the 2. Here you have a situation where price opened here, ran up here, ran down here. Not sure. Opened here. It might have run down here first. I'm thinking it ran down here first, ran back up, and then back down to close here. So that's actually another trade there, but this is more easily seen. Back above the trigger, down we go again, and this time about 5 points, and that's the Russell, and the Russell pays $50 per point. On the NQ, no trigger on the short side. If you bought 70.90, you got a zone at 80.81. If you bought 70.90, this represents $200 per contract available. Again, no trigger on the short side as of yet. Gold, we haven't looked at that, and I do believe these are this week's zones. Let me make sure. Gold, 21.22, 25.26, 38.39. After 38.39, nope, this week it's actually 59.60. So last night's alert, on gold, it said to consider selling 13.19 given the opportunity. That happened right here. So 13.19. And the swing low of this candle was 13, call it 13, wait, what? The low is 13, so call it 13.16. So that's 3 points. Or $300 per contract available. But you're trailing a stop, maybe you only get half. Well, that's $150 per contract. And if you got 10 on, well, you can do the math. Just don't get ahead of yourself on the number of contracts you're trading. I mean, I realize it's only a mouse click to change that counter from 1 to 10. But for so many reasons that I've been going over and over and over for the past decade and a half, wherever we're at on this thing, it hasn't changed. It's the same. Bonds. For a beginner, just stay away. All right. Last night's email had us in a mind, if given the opportunity, to be buyers on the bonds at 144.30. It was right in this candle here that it triggered, because they went out at then the email went out at 7:15. So 144.30. Yep, 144.30. Okay. So we put in a high at 145.08. 32 ticks to a point. You got 8, 2, it's 10. $312.50 per contract available. Okay. And then important prices, important areas are almost always tested. And so then we put in a high at 145.05. What was this high? This high was 145.08. Then we get back below the trigger and we do 145.05 again. Back below the trigger and we do 145.06. So these are these three trades are good for about 7 ticks a piece at 31.25, 200, 400, 600. You only got half. There you go. Okay. What haven't we covered? Covered crude, I believe. Well, yeah, we did kind of. No trigger on the short side. I want to point out this move from the zone to the zone, is we have partners that trade zone to zone from 60.35 to 61.35. That would be $1,000 per contract. Now, did it take a while to meander its way up there? It did. Our alert last night said to consider buying 61.20. Obviously, but our target was 61.45, the zone overhead. So from 61.20 to 61.45, that's 20 points, but it actually went up to 61.50. So that's 30 ticks at $10 per tick, $300 per contract available. Price gets back below and up it goes again, 250. And that's it for crude. Soybeans, that's the only thing left. Okay. Last night, by 10:47 on the beans. Oh, that was like a stop out. Oh. Swing high 10:46 and a quarter. So no trigger there. And the sell side was 10:27, which of course has not triggered. Okay, so it ran right up to our number, almost touched it, rolled over. Is that unusual? Not at all. Not at all. Joseph asks, so no indicators for these trades, just price action in the zones. Well, these are the Concierge Trade Alerts, Joseph. So what you have is you have your entry. The chart teaches you where to place your stop. And that's what I teach in the one-on-one mentoring sessions also, is how to read the chart so that you know where your stop goes. You also know what your reasonable target should be. And we never want to risk more than we believe is possible if the trade does as we believe it will, based not upon wild theories of any kind, but simply based on historical observance. Now, you can, and partners do, apply the indicators. I'll show you what that looks like. The indicators perform exactly the same on an hourly, a 10-minute, a 1-minute, range chart, a tick chart, a volume chart. It's all the same. Bearish cross, I'm only interested in short trades. Bullish cross, I'm only interested in long trades. And right here, where price just momentarily flirted, it did do an actual bearish cross, but price fought it. You see, we never had a pull away, which we know from the range chart in the training room in the mornings. The pull away is an extremely important part of the trade setup. It never, yeah, this was how long? Maybe 1, 2, 3 hours. So when it tries to give you something to the downside and fails like that, the upside can be quite explosive. And the same thing is true if it head fakes you, and that's what this is really, it's a head fake. If it head fakes you to the other side, but it never goes anywhere, when it lines back up with the larger direction, the greater sentiment, that's the side that you want to be on. See, because this Dow trade, you know, yes, it was a 235 point move, but how much of it was in this one 30-minute candle? So 24,880 was the low, 75,880 to 5075. Let me look here. 5075. I say the low was? 48. I did that wrong. Huh. We're going to have to reanalyze this whole thing. The swing high is 25075. Got it. The low of this candle is 4881. Okay. 4881. So 194 of those 235 points were in this one 30-minute candle. We've completed the pullback to the weekly zone, and we expect that to be good support until proven otherwise. Not only are we hitting the zone on the pullback, which from the little diagram I drew we expected, we're also tagging the BBC, right? And we know that that can serve as good support as well. So we got two factors working here that paint a picture where the market could trade higher into the close. So, Joseph, if you want to learn more about the weekly trading zones, you can Google CFRN weekly trading zones. You'll get about 2 pages of search results, just little articles I've written over the years. We've been publishing the zones since December 14th of 2009. And you can, even if you go to the top of the search page and click images, you can see charts that Google has archived over the years. And the most interesting takeaway is that since we started publishing them, and before, because I can show you examples from before, it's doing the exact same thing. Through fast markets, slow markets, low volatility, high volatility, you name it, and it just behaves the same. So you see, this is a real make or break point right here. Okay, if I was on the Dow, if I was trading the Dow using the rules-based methodology in the live training room, there's no way I would want to go short right now on the Dow. Doesn't mean it's not going lower. It's just, it means I'm not willing to take a trade that is not a high probability setup. The high probability setup will come if, how much longer? We got 6 minutes left in the life of this candle. Now, in a perfect world, price has already touched the BBC. Okay, price would move up and close at the zone, leaving a wick below, and then the next candle would open and start painting green, and well, we've already lined out the trade. Okay, in the same logical manner in which we laid this out, we can make the exact same case for this. Okay, in fact, pretty much already got it. Just sell 24,840 if you get the chance. And this time, so you've already got a double bottom here at the zone. And you see, we're trading through the BBC. So you can go either way, but it doesn't matter, because this isn't retirement. This isn't 401k. This is daily income. We'll trade it short as quick as we'll trade it long, as quick as we'll trade it short, and vice versa. All right. Okay, so that was the Dow, the Russell. I don't know if I tried to answer your question, Joseph. Hopefully you can. Partners can use the indicators, not use the indicators. Some do, some don't. Some use them in an unorthodox manner, which I teach them. So there's a lot of options there. Okay, so no trigger long on the Russell. A 2-point move and a 5-point move. In Q, heading down to that short trigger. That would be the first time in this session. Gold starting to rally. Now we know that important prices at important areas are almost always tested. So what we would look for here is we would look for gold to get back above the trigger, which it's doing like right now. Okay. And then if it comes back down, we trade it right back down. What's the long side on gold? The long side is 1332. Way up here. No. Now there's 3 minutes left in the life of this candle. So however high we can get, new candle opens, starts painting red, comes down through the trigger. Would I trade that? I would. Absolutely would. Okay, Joseph, I hope it helped. You can always sign up for a mentoring session or send me an email, and I'll be happy to answer any other questions you might have. Bonds, we already went through that. No reason to go through it again. We already went through crude. We've done it all. We've done it all. Okay. Now, our good word for the day. For those of you that have never taken the Concierge Trade Alert trial, it costs $1. You go to emini.cfrn.net. emini.cfrn.net. Okay. You click this link. Okay. Now it doesn't automatically roll you over into a subscription. It does include the live training room and the indicators for a week and all of that. Okay. Click this link. Don't click any other link. This one, so that you don't get into the automatic rollover thing. 5-day trial. You can start it on a Tuesday, a Wednesday, a Thursday. You get 5 days. All right. Now, what that means is you'll get the email every night, just like the one I was just showing, and everybody took a screenshot of. If you sign up for the trial, email me and go, hey, I signed up for the... That way I get you on my radar. I signed up for the Concierge trial. I will then send you 2 training videos. I will then encourage you to book a free mentoring session one-on-one sometime during those 5 days so that I can answer any questions and help you understand how to best take advantage of the information that you receive each and every night. 8 markets, 2 trades per market. That's 16 trading opportunities, potential trading opportunities, as soon as you open the email. But as we know and have seen even today, important prices, important areas are almost always tested. So you can, on an average day, expect to see 25, 30, 40 triggers, actual triggers. Will you take every trigger? I don't recommend it. Number one, you set your goal for the day, whatever that is, and when you reach it, you're done. But beyond that, a lot of the triggers won't have proper risk-reward ratio type setups. So I teach you how to spot the ones you should walk away from and the ones you should trade. So that's all part of the training. So anybody that wants to take that trial, I know tomorrow's Friday. That's okay. Your first day can be a Friday. You get the alerts tonight. You work with them tomorrow. Then over the weekend, you study and you pepper me with questions, and then you're ready to hit it Monday. Now, the good thing about the zones is that you don't need a specific type of platform or charting package to utilize the zones. You're just simply throwing a horizontal line up where the zones are and then following instructions. So the only reason you would need our platform or the Daniels platform or a compatible platform is so that you could also run the indicators if you want to during that week's trial. Okay, one more time. Partners meeting tonight, 9 p.m. Eastern. I do hope you'll all be there. All of you that are partners. Email your question ahead of time, and you'll be at the top of the list when we answer questions. Oh, look at what we did. We cut right through there. Okay. Now what were we expecting? We were expecting buyers to rally this thing. Maybe not a lot, but at least a little. Okay. They didn't. This is also why we don't do things like just park an order here, because we assume they're going to do it, okay, and then get steamrolled. That's painful. That'll leave a mark. You wait for price to show some evidence. Now, it looked like we had some evidence earlier in this candle, right? Now, this candle is only 2 minutes old. No, this candle's 2 minutes old. Right here. See that? Okay. So this candle is the one where we had that little bit of a wick, and I said, you know, it looks like some buyers might be starting to come in right here, right now. But we don't take action yet. We let this candle finish, and when this candle finished, look what it had done. Pushed us all the way to the bottom of the box. Which is why I say it's usually in the first or last 10 minutes of an hourly candle that you will often see the most movement. Okay. All right, we're 3 minutes in. Are the buyers going to run it up? Got to see some real evidence. Now, you see these lows over here? That's now resistance that buyers have to overcome to get to this resistance. Now, we talked about a trade here, didn't we? Can't remember what it was. What did we say we wanted to do if we took out? I thought I wrote it down. Did anybody write it down? Right here. And we were going to be out before, just a little bit before the bottom of the box, if it broke through. Oh well. And then I think we talked about something down here. I think down here it might be 43 or 44. 40, call it 43 to 34. Now, see the buyers? On cue. Why? Because for them it's a low risk trade. They get long here and their stop goes like right there. I mean, it's almost, you gotta have a stop, you gotta have a physical stop. But you don't have to risk a lot. It's called a low risk trade. You don't have to risk a lot to find out if you're on the right side of the trade. We understand the reason why the market will attempt a rally here. How far do we need it to rally? Well, currently we're at 27.49. If it gets back to the bottom of the box, that's 3.5 points. Okay. Oh, we drew that. We actually drew on the Dow chart, didn't we? Yeah. Okay. Now, that was all predicated upon this holding, this zone, and the BBC, and they failed. And we talked about the fact that do they have to do that? Nope. And we could make just as logical an argument on this side as we did on this side. Now, this spike low hit 71. Could you trade 60 to 40 and have your points for the day? You could, if that's what you're shooting for. All right. Good word for the day. Again, if you participated in the Christian Traders CT Global pre-sale and you have not sent us your wallet address, please do so today. The Secrets of Self-Control Part 3, Titus 2:11. The grace of God offers salvation to all people. It teaches us to say no to ungodliness. Talk back to your feelings. We put far too much emphasis on our feelings. We think everything has to feel good or it's just not worthwhile. We say things like, I don't feel like studying, I don't feel like working, I don't feel like reading my Bible. Or we say things like, I feel like having another drink. I feel like sleeping until noon. Don't give your feelings that much authority. Feelings are highly unreliable. If you allow them, they will control you and manipulate you. God doesn't want you to be controlled by your feelings. He wants you to master your moods. If Christ is the master of your life, you can master your feelings. Talk back to Him. God says He wants you to learn how to challenge your emotions. The grace of God teaches us to say no to ungodliness and worldly passions and to live self-controlled, upright, and godly lives. That's Titus 2:11-12 out of the NIV version. God's grace, the most powerful thing in existence, gives you the power to do what's right. It gives you the ability to say no to that feeling, to that desire, to that impulse. Are you battling a weight problem? Before you ever walk into the kitchen and open the refrigerator, you've already begun to talk to yourself about eating. If you are serious, now you're going to have to challenge some of those subconscious attitudes you have about food. Same goes for trading. Do you always get in early? Always get out late? Slip your stop? Miss your entry? Why? When you hear your mind saying, back to the kitchen, I just have to have a snack or I'll die. Well, you probably won't. No, I'm not going to die. In fact, I'll probably actually be healthier if I don't have a snack. Bottom line, God's supernatural power can help you to master your moods, your thoughts, and your desires. If your life is one that is powered by feelings, emotions, it's not going to end well. No. Now, am I saying you shouldn't have feelings or you shouldn't have emotions? Oh, no. God gave them to us for a reason. And we have to let each and every one of them come out and play from time to time, or mentally we won't be healthy. From happiness and laughter and joy to grief and depression and mourning. They all have a part to play. They all have speaking roles. Okay? Now, we don't want to get caught up in the depression, or it'll become clinical. It will need some kind of pill, right? We want to nip these things in the bud. And for me as a mentor, sometimes I have to nip in the bud some of the happiest and most excited people I've ever spoken to. Because they had a great day today, for which I'm I'm so thankful. But I hear in their voice the words that they're using is now they got it. Now they understand. They're so glad they finally turned that corner. Okay. Talk to me. Because I have to, because when they call, they're Fred Astaire dancing on my desktop. And if I don't get in there and bring up a little bit of a dose of reality, tomorrow that person with the highly charged emotions will be calling, but they won't be calling from the top of my desk. They'll be calling from beneath my desk in a fetal position. We have to leave our emotions out of the trading platform. Okay? Tie them up to a tree out back. They'll be there when you're done. Everything you do when it comes to trading needs to be thought out, well thought out, and it must be based on logic, not on your feelings, not on your emotions. If you reached your goal today and you're new to trading, well, that is certainly something to be happy about, to be excited. Just got to make sure you're on the right path. We got to make sure you got those points for the right reasons. You didn't luck into them. That you did things exactly like you were supposed to do. Okay. The getting in the points is not the toughest part of trading. It's all that stuff. Roll it around between the ears. And hopefully we'll be able to help you with that during the mentoring program. For those of you that have just become partners and are becoming partners today, we're going to work on all of those things. We don't claim to be the fastest gun in the West. We are pretty accurate. Okay? But just know this, when you're in our midst, you'll always be treated with dignity and respect. Of course, we expect to be treated the same. But that's never really an issue with this group of folks. And I'm really proud to say that our community is some of the nicest people I've ever done business with. And in fact, I remember so clearly, we've been working, with Bert and Leslie for about 6 months. And by working with, I mean we had chosen their platform to put out there, for all of the people becoming partners to use, because we thought it was simple and Bert understood our methodology and all this. It just seemed like a great fit. And one day Bert or Leslie made a comment to me, and they said, I've worked with a lot of different groups and organizations and training centers over the years. They've both been brokers for quite some time. But I never met a group of people so nice, so polite, so kind, so understanding as the CFRN group. I said, well, you know why? And the answer was, and still is, Jesus. That's the deal. When you have a personal relationship with your Creator, you just treat people differently because you start to see the world through the eyes of God. When you touch someone, be it your wife, your husband, or a child, you're touching them with the hands of God. When something happens that breaks God's heart, it breaks your heart. And if it makes God smile, you're probably dancing on your desktop. Get out before you hurt yourself. All right, let's wrap it. Thanks so much for be in the meeting tonight now. Come on. Thanks for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.